Good morning, everybody. This is today's European Session Outlook. My name is Alex, Senior Account Executive at GDMFX. We'll start with the North American markets. The economy contracted in the first quarter for the second straight year. A disappointing start that could foil the chance of the US reaching 3% growth in 2015 for the first time in a decade. The GDP annualized for the first quarter came out at 0.7%, with the consensus at 0.8%. The S&P 500 index had a range of 20 points. It's at 2110 now. The biggest mover Friday was the Nasdaq with 33 points down. Today, we'll be expecting the ISM Manufacturing PMI. Also, the non-farm payrolls is one of the main events we'll be eagerly awaiting on Friday. On to the EU markets. Both the DAX and CAC indexes have lowered largely early in today's trading session. The DAX with 260 points down, the CAC 40 150 points down. Friday we had the Swiss GDP year-on-year coming out at 1.1% less than expected and quarter-on-quarter 0.1% less than expected. The German retail sales month-on-month came out 0.9% better than expected, but year-on-year was 1.5% worse than expected. No Tier 1 news for today. However, we will be expecting the Markit Manufacturing PMI from the Eurozone. The UK markets, the pound post-election rally seems to have run out of steam as investors shift their attention to the overall economic performance from the UK and the EU referendum negotiations, with economic recovery showing signs of a cool down and the EU referendum negotiations, which promise to be a daunting task for David Cameron. The sterling looks far less attractive. The pound had its longest losing streak since October and touched a low last seen on election day. The overall loss for the pound versus the dollar was 1.5% for the week. Inflation data, along with construction, manufacturing, and services data, can add additional pressure on the sterling if they come out in red. The FTSE 100 was opened with a 50-point gap and lost 24 points yesterday, and it closed at 69.48. Today we only have the Markit Manufacturing PMI to come out. The biggest mover on Friday was the GBP Australian dollar with 17 points up. On to the Asian markets. The latest data signaled an improvement in operating conditions in the Japanese manufacturing sector. Growth in both production and new orders resumed, having fallen in the previous survey period. Concurrently, employment growth was sustained for the second straight month, while buying activity increased for the first time in 3 months. Meanwhile, input prices rose at the weakest rate in the current 29-month sequence of inflation. Tomorrow, we'll be anticipating the Royal Bank of Australia interest rate decision and the interest rate statement, the bank statement. For commodities, the gold futures scored their first monthly gain in 4 months on Friday, but still settled lower for the week on the back of recent strength in the US dollar. Crude oil prices held weaker in Asia on Monday as a mostly upbeat set of readings on the regional economy failed to spur investor excitement on demand prospects. Energy traders are also awaiting a critical OPEC meeting in Vienna on Friday. The oil cartel is largely expected to keep production levels steady above 30 million barrels per day, despite ongoing concerns over ample global supplies. Gold had a range of $7, trading at $11.91 now. Silver had a range of 10 cents at $16.71 now. Crude oil had almost $3 range at $59.81 now. Natural gas is trading at $2.60 at the moment, open with a gap of 10 cents range, and it traded 11 cents on Friday. Thank you everybody for the attention. This was today's European Session Outlook. Again, my name is Alex, Senior Account Executive at GDMFX. Bye-bye.